Welcome back to Money Matters with me, Amelia Sellick. Today we'll be learning about income tax. Income tax is a sum of money that is paid to the government to help raise the living standards of your country. Tax funds for public goods and services such as schools and roads. Our learning intention is to correctly calculate income tax so that you can apply this knowledge to your finances in the future. To be able to do this effectively, you will need to be able to complete the following success criteria. Now let's jump right in.
Miss, can you help me with this question, please?
Yes, of course. Let me take a look.
Ellie Fields has a full-time job as a hairstylist where she earns $53,970 per annum, meaning per year. She receives a tax deduction of $2,000. That means that her income that can be taxed is reduced by this number. A taxable income is the earnings that are required to have tax paid on them.
We use the formula taxable income equals total pay minus tax deductions. Let's substitute these numbers in. Therefore, this is Ellie's taxable income. On to part B.
To find the answer, we'll use this formula. On screen is the tax table we'll use to help us. For Ellie, her taxable income lies in the third bracket. This number is the fixed amount. It is the minimum amount of tax you must pay each year. Next is the base amount, $45,000 in this case. Finally, we have the tax rate. The rate is 32.5 cents for each dollar over the base amount. When substituting this into the formula, we must convert the amount to dollars, so it will be $0.325.
We'll now just pop in the values. Let's use our trusty calculator to give us the amount of tax you must pay. Medicare Levy. I'm sure you all heard the term Medicare thrown around in your day-to-day life. When you pay Medicare Levy, you're putting funding towards hospitals, doctors and more. Let's put this term into practice.
Determine the Medicare levy for Sally if she makes an annual taxable income of $23,974 per annum.
All we need to do is take Sally's taxable income and multiply it by 0.02 because Medicare levy is 2% of the taxable income. And this is the answer we get, so let's move on.
Percy has a gross annual income of $175,600. In paid due tax, Percy has paid $2,547.83 per month. He also earned $567.20 in interest from an investment. His tax deductions came to $43,020.
This example has a lot of new terms, so I'll go over them with you. A gross annual income is the amount of money an employee receives before taxes and deductions. This one is an acronym. It stands for pay as you go tax. You pay a little bit of tax each pay rather than a lump sum at the end. Finally, we need to know what a tax refund and a tax debt is.
To explain a refund, say you paid for a product with a $20 note but it only costs $15. You've paid too much and they must refund you $5. It's the same with tax. If your employer has taken out more tax than you actually need to pay, you'll get a tax refund.
If you haven't had enough tax taken out, a tax debt is what you owe in tax. So let's calculate Percy's taxable income. Percy's total pay is a combination of his gross annual income and the money he earned in interest. We must then subtract his tax deductions, giving us his taxable income. For part B, we need to calculate the tax payable on Percy's taxable income, including the Medicare levy. Let's start with that. Quick! Do you remember the formula? It's 2% of your taxable income. The Medicare levy equals this. To determine the tax payable, we use the formula from earlier. Do you know what bracket Percy's taxable income fits into? It's the fourth bracket. We'll now substitute these values into our equation. Grab out our calculator and type it in. This is the answer you should have. So let's move on. To gain our total tax, we need to add the Medicare levy to the tax payable. Here's our answer! To figure out part C, we must discover what Percy has already paid. It states that he has paid this in paid due tax per month. How much has he paid in a year? We multiply this by 12. Percy needs to pay this in tax, but he has only paid this. Obviously, he has not paid enough, resulting in a tax debt, which is not what Percy would like to hear. To find the amount that Percy needs to pay, we subtract the amount that he has paid from what he needs to pay. This is Percy's tax debt. Well, that was easy, wasn't it? Today's tutorial taught you how to correctly calculate income tax so that you can apply this knowledge in your future. As always, thanks for watching Money Matters, and I'll see you again next time.